Stop. Put down whatever you are about to do and listen. I know what you saw this morning. Geneva ended without a signed deal. The headlines say significant progress. The market says 5,185. And somewhere on your screen the forums are split, half calling it a dead rally, half calling it the last warning before the price explodes. They are both missing the point entirely. It is Friday, February 27th, 2026. Gold is trading between 5,178 and 5,185 per ounce, marking the 7th consecutive calendar month of gains. And what just happened in Geneva, a stall, not a breakthrough, is the single most important catalyst for gold's next move. Ladies and gentlemen, Vault Tracker here. The analysts have spoken. If this deal fails within 10 to 15 days, gold goes to 5,300. You need to understand why that number is not a guess. It is arithmetic. Gold is heating up and this move could surprise the market. Let's break down what's happening right now. If you want clear and powerful silver market updates, make sure to like, subscribe, and follow Alex Carter Reports for the latest analysis. Let us map the technical architecture precisely, because the structure tells you everything about what a Geneva collapse does to the price. Reports confirm gold is trading between 5,190 and 5,205 per ounce as of February 27th, the 7th consecutive month of gains. Prices have pulled back from January's high of $5,608, but the current sideways movement represents compression, not weakness. Analysts describe it as buyers pausing before another possible move higher, coiled spring behavior in a 7-month bull market. Sources confirm gold trading at $5,178.90 as of February 27th morning. A critical calendar fact no analyst is highlighting: February 28th and March 1st are non-trading days for gold. The next active session is March 2nd, where analysts project gold stabilizes within a $5,107.72 to $5,208.41 range. This 2-day weekend gap means any Geneva-related escalation headline over Saturday and Sunday accumulates as compressed risk premium that re-enters the market entirely at Monday's open. Gap up or gap down, no intraday bleed. The specific resistance and support architecture is defined by analysts tracking February 27th price action. Resistance sits at $5,208. Above that, the next target is the recent high of $5,251. Above that, $5,291. Support is found at $5,133. These levels reflect the institutional accumulation distribution zones that formed during gold's rapid recovery from the $4,880 corrective base on the 2-hour chart. Bloomberg's February 27th morning data confirmed gold steady at $5,185.75 per ounce, with silver down 0.3% and palladium rising. The Bloomberg Dollar Spot Index closed with a 0.1% gain on February 26th, a trivially small dollar move that nonetheless kept gold just below the 5,200 resistance ceiling heading into the weekend. Analysts confirm the precise two-sided setup. Gold and silver are attempting to break above resistance levels at 5,290 respectively, but have failed to sustain gains so far this week, raising drawdown risks should a near-term geopolitical deal materialize. That framing is the binary governing gold from February 27th forward. Deal materializes in Vienna, drawdown toward 5,133. No deal in the 10 to 15-day window. Gold clears 5,208 and accelerates toward 5,251. Then 5,291. Senior metal strategists note considerable uncertainty remains around how the negotiations unfold, and in a 7-month bull market, considerable uncertainty is not a negative signal. Considerable uncertainty is the structural floor mechanism that prevents the institutional safe haven bid from deflating. The March 13th Personal Consumption Expenditures Report, the PCE price index, remains the next major structural catalyst beyond the Geneva diplomatic window. Until that release reshapes Fed policy expectations, dollar trajectories, and real yield pricing, the gold market is being driven by one event and one event alone: the outcome of the 10 to 15-day diplomatic window that Trump set publicly before the Geneva talks even began. The weekend gap between now and Monday's open is where that window either narrows or widens. Both scenarios have gold moving. Only one of them moves it toward 5,107. The other moves it through 5,208. Diamond hands know which side of that trade to be on before Monday. The geopolitical machinery driving gold's 5,185 price on February 27th is not theoretical. It is physical, it is armed, and it is intensifying. Reports confirm the third round of indirect U.S.-Iran nuclear talks concluded in Geneva on February 26th without a formal agreement. Oman's mediating foreign minister confirmed on the record that talks concluded with significant progress in the negotiation, but without a signed deal, and that talks will resume soon after consultation in the respective capitals, with technical expert discussions expected next week in Vienna at the International Atomic Energy Agency. Sources familiar with the discussions said from the Trump administration's perspective, the talks were positive. Iran's foreign minister described the 6-hour two-session format as productive. The key structural detail is what positive and significant progress cover, and what they do not. Reports confirm Iran's proposals were not made public. Iran has emphasized it expects the lifting of sanctions in return for possible nuclear concessions. The Trump administration, on the eve of the talks, imposed fresh sanctions over Iran's oil exports and ballistic missile production, deliberately escalating pressure simultaneously with the diplomatic process. U.S. Special Envoy Steve Witkoff revealed the president did not understand why Iran hadn't capitulated, given the forces arrayed against it in the region. Iran's foreign ministry spokesman responded publicly, "The word capitulation does not exist in the Iranians' dictionary. That is not diplomatic posturing. That is a fundamental incompatibility of negotiating frameworks that a single Vienna technical session cannot bridge. The military architecture makes the gold bid structural." Reports confirm the USS Abraham Lincoln Carrier Strike Group is operating in the Arabian Sea, accompanied by guided missile destroyers. The USS Gerald Ford, the world's largest aircraft carrier, entered the Mediterranean through the Strait of Gibraltar and is heading east toward Israel. Sources confirm the U.S. repositioned more than 150 aircraft to bases in Europe and the Middle East after the second round of Geneva talks ended without a breakthrough. Near-constant surveillance of the Strait of Hormuz continues with P-8 Poseidon planes and MQ-4 Triton drones based in the UAE and Bahrain. Satellite imagery placed USS Abraham Lincoln just 422 miles from the Iranian coast on February 15. Reports confirm Trump issued the timeline publicly at the Board of Peace meeting. "I would think that would be enough time, 10-15 days, pretty much maximum, warning that bad things happen if no deal is reached." White House spokeswoman Caroline Leavitt confirmed there are many reasons and arguments that one could make for military action. Senate Majority Leader John Thune stated publicly the goal should be regime change if the United States takes military action against Iran, the most explicit war objective stated by a senior U.S. official in this entire cycle. Vice President Vance confirmed on Fox News, "Iran cannot have a nuclear weapon. That would be the ultimate military objective if that's the route that he chose." When Senate Majority Leader, Vice President, and Press Secretary all align publicly on regime change and maximum force. The risk premium in gold's 5,185 is not sentiment. It is structural pricing of a genuine probability distribution. Iran's behavior amplifies rather than reduces the structural bid. Reports confirm the IRGC launched military drills less than 24 hours before the Geneva session. Missiles fired, drones deployed, coastal targets engaged. Iran's armed forces chief warned Trump would be entering a confrontation that gives harsh lessons. Reports confirm IAEA Director General Grossi stated after Geneva that an obvious gap remains between the two sides on uranium enrichment. The U.S. demanding no enrichment, Iran refusing to abandon it. Grossi confirmed IAEA inspectors still lack access to the nuclear sites targeted in the June 2025 U.S.-Israeli strikes. He confirmed the 400 kilograms of enriched uranium remains where it was before the bombings and has not been moved. The gap is not procedural, it is existential. The sentiment architecture on February 27 is the clearest picture of institutional transition this entire gold bull market has produced. Retail speculators have been washed out. Systematic capital is rebuilding. Tier 1 bank targets are accelerating upward. And the fear of missing out has migrated from retail forums to institutional allocation committees. Reports confirm Wall Street is now focused on how much higher gold will go, rather than if it will rise at all. That is a sentiment transformation that cannot be overstated. 3 weeks ago, the debate was whether the gold bull market survived the war shock. Today, the debate among institutional analysts is whether the next stop is 5,400 or 6,300. Goldman Sachs recently hiked its 2026 gold forecast to $5,400, according to reports citing emerging market reserve managers aggressively diversifying away from the dollar. That is not a tactical trade call. That is a structural thesis from the world's leading investment bank, built on sovereign capital flows decoupling from dollar hegemony. JP Morgan reiterated its year-end gold target of 6,300, projecting sustained central bank demand averaging 585 tons per quarter will drive a 22% surge from current levels. The JP Morgan framework is built on a mathematical relationship, explaining approximately 70% of quarter-on-quarter gold price changes every 100 tons above 300. And 50 quarterly tons of net demand is worth approximately 2% of quarterly price gain. At 585 tons per quarter, the math compounds every 90 days. Deutsche Bank reiterated its forecast of $6,000 per ounce by year-end, stating the war shock pullback is not evidence of a durable shift. and that thematic drivers for the yellow metal appear unchanged. Sources also note that Kunal Shah expects gold to reach $5,020 per ounce by year-end, acknowledging a little bit of the speculative froth will need to flush out but confirming upside from current levels. That Goldman 5,400 forecast is the analytical source of the 5,300 target in this video's title. The path is direct. Gold at 5,185 on February 27th. Resistance at 5,208. If Geneva diplomatic window expires without a deal, and Trump's 10 to 15-day ultimatum was issued publicly, the safe haven flight to gold clears 5,208, advances through 5,251, and closes on 5,291 in the same move. Goldman's 5,400 is approximately 2% above 5,291. 5,300 is the next structural plateau. Gold hits when closing above 5,291. The central bank structural floor reinforces every near-term resistance break. Reports confirm J.P. Morgan projects central bank buying of 755 tons in 2026, below the prior three-year 1,000-ton pace, but still elevated when compared to pre-2022 averages of 400 to 500 tons. The structural shift accelerated when Russian reserves were frozen in 2022. That event permanently altered the calculus of every emerging market central bank's reserve allocation. It does not reverse because Iran and the U.S. had a 6-hour session that Oman called productive. Reports note Bank of America maintains its 12-month gold target of $6,000 per ounce, viewing current pullbacks as healthy consolidation in a structural bull market. The concentration of institutional upside conviction at current levels, Goldman 5,400, JPM 6,300, Deutsche 6,000, BofA 6,000, all posted in the same week. Gold trades at 5,185 is historically unusual. When multiple Tier 1 banks simultaneously upgrade targets with gold, still 12 to 21% below those targets, the speculative tourist has been replaced by the systematic allocator. The complete bear case for gold retreating from 5,185. Every pillar stated honestly, then the arithmetic counter. Bear pillar 1. Geneva thin progress risks the safe haven bid. Reports confirm Oman's mediating foreign minister characterized talks as significant progress. A senior Iranian official told Reuters, the framework is achievable if Washington separates nuclear from non-nuclear issues. Analysts explicitly identified drawdown risks should a near-term geopolitical deal materialize. A gold market that priced sustained war risk at 5,185 deflates toward 5,133 on a genuine diplomatic breakthrough emerging from Vienna's Monday technical session. Bear pillar 2, weekend gap creates headline risk. Reports confirm February 28th and March 1st are non-trading days. If a Vienna technical agreement headline drops over the weekend, gold opens Monday, March 2nd with a downside gap. The projected March 2nd range already brackets the downside scenario at 5,107, a $78 move lower from current levels. Bear pillar 3, data calendar delivers dollar tailwind. ADP on March 4th, ISM services on the same date, and non-farm payrolls March 6th represent a three-print sequence that can each individually strengthen the dollar if beating expectations. A stronger dollar directly compresses gold. The FOMC is expected to cut approximately 50 basis points in 2026, but strong jobs data pushes those cut expectations further out in the calendar, raising real yields and reducing gold's appeal. Counter to every pillar. Geneva, significant progress counter. Reports confirm IAEA Director General Grossi stated after attending Geneva that an obvious gap remains on uranium enrichment, the U.S. demanding complete halt, Iran refusing to abandon it. Sources confirm IAEA inspectors still lack access to June 2025 strike sites. The Witkoff-Bagay exchange, expecting capitulation versus capitulation doesn't exist in our dictionary, exposes two parties operating from incompatible negotiating frameworks. Significant progress in Oman's diplomatic language means the parties agreed to keep talking. It does not bridge what Grossi called an obvious existential gap. A Vienna technical session on inspection procedures cannot resolve enrichment scope and ballistic missiles in a single weekend. Weekend gap counter. Reports confirm gold can gap higher on a weekend military escalation headline as easily as it gaps lower on a diplomatic progress headline. The Senate Majority Leader's regime change statement and Vice President's ultimate military objective language are weekend durable escalation signals. The IRGC launched military drills less than 24 hours before the previous Geneva session. A single IRGC incident in the Strait of Hormuz over the weekend, the same waterway where IRGC fast boats attempted to board a U.S.-flagged tanker on February 3rd, closes the gap higher, not lower. Analysts confirm the risk is genuinely two-sided. Data counter strong jobs data only suppresses gold if it meaningfully pushes Federal Reserve rate cut expectations past their current pricing. with the dollar already having depreciated approximately 9% since Trump took office, and the structural trend pointing toward DXY at 93.9 on a 12-month horizon. Sustained dollar strength requires a continuous data beat sequence across multiple quarters, not a single ADP or NFP print. And every week data print in the March 4th through 6th sequence further compresses real yields, reprices gold upward through 5,208, and delivers the Geneva equivalent safe haven catalyst through macro channels rather than military ones. The data calendar is two-sided for gold, not a unidirectional headwind. Against a three-pillar bear case that is event-dependent, timing-sensitive, and data-conditional, stands 7 consecutive months of gains. 4 institutional targets, at 5,400 to 6,300, central bank buying running structural for 3+ years, and a military buildup that added 150 aircraft to European and Middle Eastern bases in the single week following the second round of Geneva talks. The battle plan for gold on February 27, 2026. Gold at 5,185. The Geneva clock ticking. Vienna technical talks beginning Monday. Here is the map. Level 1, $5,107.72. The lower boundary of the March 2nd projected stabilization range confirmed by analysts. This is the downside open for Monday's session, if a weekend diplomatic progress headline surfaces from Vienna. Not a breakdown, a reset. The spring loads one more notch. Diamond hands accumulate 5,107 to 5,133 without hesitation. This is the gift the diplomatic optimists are about to wrap and deliver. Level 2, $5,133. The intraday support level confirmed by analysts tracking February 27th price action. A daily close above 5,133 on Monday or Tuesday, regardless of any weekend headline, confirms the bull structure is intact and the advance is resuming. The line in the sand. Anything above 5,133 on a closing basis preserves the path to 5,208 above. Level 3, 5,178 to 5,185. The February 27th equilibrium zone. Gold at 5,185 this morning. The market holds exactly where it needs to hold to maintain pressure on the 5,208 resistance above. Everyday gold closes in this zone without breaking lower, confirms the Geneva risk premium is not deflating. The institution is positioned, the diamond hands are present. Level 4, $5,208. The immediate resistance breakthrough trigger. Reports confirm a daily close above 5,208 activates the advance toward 5,251. The recent high anchor, then 5,291. Reports confirm that if Geneva negotiations break down, a surge in safe haven demand could easily propel gold past the 5,200 mark. Geneva breaking down is the switch. 5,208 is the first level that falls. Level 5, 5,251, 5,291, 5,300. The cascade of targets above 5,208. Analysts confirm 5,251 is the recent high. 5,291 is the next resistance above that. 5,300 is the zone. Goldman's 5,400 target implies as the next structural consolidation plateau. Sources confirm that if the Section 122 constitutional challenge deepens alongside a Geneva collapse, gold could test the 6,000 mark as the ultimate insurance policy. Scenario 1. Vienna stalls, Trump acts. Technical IAEA talks beginning Monday fail to bridge the enrichment and ballistic missiles gap. IAEA Grossi confirms in the Vienna post-session statement that the obvious gap remains. Trump's ultimatum window expires. Expanded sanctions or military action announced. Gold opens Monday above 5,208. Advances to 5,251 same session. Breaks 5,291 within 2 days. Every ounce accumulated at 5,107 to 5,133 on Saturday-Sunday positioning captures the full advance from Monday open. Scenario 2. Vienna generates procedural agreement. A narrow agreement on IAEA inspection procedures, not enrichment scope, not ballistic missiles, provides diplomatic cover for a constructive progress weekend headline. Gold dips toward 5,107 to 5,133 at Monday open. That dip is the gift. The ultimatum clock is still running. The enrichment and ballistic missiles gaps remain unbridged. Diamond hands accumulate 5,107 to 5,133. Gold reloads through 5,208 before March 6th payrolls. Your question for the comments. With Goldman calling 5,400, JP Morgan calling 6,300, and Trump's 10 to 15-day ultimatum running on a Geneva no-deal outcome, do you believe gold breaks 5,251 before the March 13th PCE data? Or does a Vienna technical agreement first create the 5,133 accumulation entry? State your conviction level. This is Vault Tracker here. 7 months of gains. The clock is running. Stack now. That's it for today's gold update. The market is setting up for a potential big move, so stay alert and stay prepared. If you found this analysis helpful, don't forget to like the video, subscribe to the channel, and turn on notifications so you never miss an update. This is Alex Carter Reports, bringing you clarity in every market move. See you in the next one.